The O Cannabis Conference and Expo returns to Toronto June 1st through the 3rd, and there's still some good booth locations available. This exciting event is free for cannabis retailers and will feature Tommy Chong receiving a Lifetime Achievement Award at the O Cannabis Industry Awards. For more information about exhibiting or to register to attend, go to ocannabis.com. That's OCANNABIZ.com. One of the cannabis banking trailblazers is going public. You're going to see Safe Harbor Financial going via NASDAQ at a $185 million deal. But does it actually make money? We're going to look at some IPOs, the top 9 multi-state operators, and check and see if revenues mean anything or if it's just about earnings. All of that coming up.
It's only entertainment.
Welcome back to The Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast.
So there's been some market analysts that have talked about revenues coming down, declining sharply for some of these cannabis stocks. And they've made some reductions to their estimates for Curaleaf, TerrAscend, moderate decreases for AYR.A, Wellness, Jushi. Estimates for Columbia Care and GTII are virtually unchanged. Verano, Trulieve are a little bit higher, but a lot of it is because of some of the adjustments to earnings. So the graph is showing the percentage revisions for the earnings, as the earnings before interest, taxes, depreciation, amortization, or otherwise known as EBITDA. And so looking at the EBITDA margins, that's the orange dots. Blue line is the performance of each company's stock relative to the performance of a cannabis ETF, MSOs. You can blame the mergers and acquisitions that had a significant impact on a lot of these revisions from revenue to earnings. Are people trying to see if it's truly accretive or a dilutive process? The Trulieve, or excuse me, the Tilray and Hexo merger might become dust in the wind. The AOL Time Warner deal, where you have 2 mega companies merge and it just becomes decretive, and both of them are obsolete, which probably happened, unfortunately. I liked Hexo. I thought they were doing really well with their automation. They just weren't able to gain market share, so they just kind of decided to hitch to the closest zombie to them. I don't think that's going to work out very well. But Trulieve, Verano, they got the $1.5 billion and $630 million respectively in acquisitions. Even some major acquirers had their EBITDA revised downward. You saw AR Wellness complete a $1 billion acquisition, and analysts revised their EBITDA predictions downwards by 8%. So they didn't really see that as accretive. $3 billion written off by Canopy and $1 billion written off by AYR.A has really triggered the industry to say, let's really look at what they're doing and scrutinize it, because some of these deals, whether the Supreme deals weren't an arm's length deal, or some of these where previous people knew each other and they're given $800-900 million, and in the end, we'll see what happens. Don't really see that working out very well for shareholders in the long term. Which is a surprising thing, that a lot of shareholders aren't really all that involved and they don't do their due diligence. They're just kind of more gamblers than anything else. They've got a lot of FOMO. Bottom line, I guess the main takeaway here is that margins are what's missing. So you can see that in the orange dot on the graph. All of the companies on the list, except for Curaleaf and TerrAscend, have higher revenue projections for 2022 than they did a year ago. But every company except Verano has lower EBITDA margins than they did a year ago. So the lower margins more than offset the higher projection revenues. What happened to that margin expectations? Verdian Capital Advisors is estimating or guessing that the sell side equity analysts were too optimistic, and they had to rein in their expectations. So they don't know what they're talking about. They think that people are being true to their word, saying that they're going to produce a certain amount. So their projections on how much they're growing or how much that their top line or bottom line revenues, profits are going to be are all wrong. One other interesting thing on the graph is the blue line shows that the earnings revision had little impact on the relative performance. Curaleaf, the most significant downward revision, actually outperformed Trulieve with the most significant upward revision. So even though analysts kind of maybe got it wrong, or maybe the analysts got it right, regardless, what we're seeing is that Curaleaf is been revised to the downside, Trulieve to the upside. But what investors or speculators or gamblers are saying is that Curaleaf is worth more than Trulieve at the moment. I don't know if either side really knows what they're talking about in the end, because fundamentals don't really matter. I mean, the analysts are looking at fundamentals. Traders are looking at technicals and just kind of buying it out of speculation no matter what. So it's really hard to infer what really any of this means, whether it's revenues or earnings. Regardless, I think there's a lot of opportunity in here with SIN stocks, as there's SIN clauses not allowing people to buy it. There's truly no fundamentals whatsoever. And if there's no news and no technicals surrounding federal legalization, nobody cares. So right now, if you kind of either invested individually, kind of diversified, whatever, this isn't financial advice. I'm just saying, I think that there's some opportunities within here that, especially with federal legalization and the elimination of 280E, that's going to make all of these stocks look a lot more profitable overnight. But is it worth not having it in Bitcoin or some other gambling option? I'm not sure just putting it in here and waiting is the right thing to do. There's a lot of other opportunities. If you don't already know, check out Tor Alerts. It tells you when to buy stocks, when to sell them, and crypto and stock options. You check it out, toralerts.com or Android, iOS App Store. It's a freemium model. Again, kind of tells you to alert you when to buy stocks. So you don't have to just sit on them. The buy and hold is terrible. Even for crypto, if you bought and held Bitcoin, you'd only get about 28% compared to a trading strategy, which is what the app will do, alert you to buy and sell, giving us a 90 something percent, 95, 98% return on Bitcoin alone, 876% on crypto together. But I don't advise anybody to do anything, especially buy and sell stocks or options or crypto. But buying and holding pot stocks is not something I would suggest at all. So invest wisely, trade wisely, check out Tor Alerts.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.
How do cannabis CEOs balance growth and optimization strategies? What is THCO, Delta 10, and CBNA, and why should you care about these minor cannabinoids? And why isn't the endocannabinoid system covered in medical school? Most people think they're up to date in trends in the cannabis industry, but they're about 6 weeks behind. Learn about what is truly next in the cannabis space by joining myself, Brian Fields, and Kellen Finney every week on the Dime Podcast, and of course, on PodConnects.